Are Chinese shoppers getting ready to spend? It sure seems that way with money pouring into the China Consumer ETF. That's the CHIQ. Joining me to talk about the momentum in that fund is Bruno Del Ama. He's the CEO of Global X Funds. Welcome, Bruno. Now, that particular fund, the CHIQ, has nearly doubled in its assets under management over the past few months. It's performed quite nicely over the last 6 months. What's driving that?
Well, if you look at China, what's happened, maybe looking 2 years before that, there were a lot of questions and concerns about growth coming out of China, maybe a hard landing in China. If you look at the growth readings over the last 3 quarters, they've actually been quite positive. I think they dispelled a lot of the concerns about a hard landing in China. And at the same time, valuations through that process have become very compelling. And so if you look at opportunities in China generally, valuations very attractive, economic data points very attractive. Specifically within the Chinese consumer segment, that's the area where you're seeing the fastest growth taking place in China. And so, of course, a lot of interest on this China Consumer Fund.
Well, clearly people are noticing this because your fund now has about $210 million in assets, which is up quite substantially from only a few months ago. What exactly is in the fund? Which companies?
Well, it has all the largest companies that provide access to the Chinese consumer segment, both consumer staples and consumer discretionary. So, you know, some names that we may know, like Tsingtao, the beer company, which we also consume here in the U.S., but most of the names we wouldn't be familiar with because obviously they target the billion-plus people domestically in China. So you have auto manufacturers, retailers, education companies, etc. So pretty diversified, both consumer staples and discretionary.
And do you buy the A shares, the B shares, the Hong Kong listed shares, the ADRs? Because buying Chinese stocks is not an easy process.
Yeah, most Chinese companies have listings in Hong Kong, so most of the companies are listed in Hong Kong, but we also include B shares, Chinese companies that may be listed in places like Taiwan, or even the Chinese N shares here in the U.S.
Now, there's still worry about a real estate bubble over there. You're hearing less about it now because the entire world is moving up quite nicely. Tell me, could this derail the CHIQ?
Well, we don't have exposure to real estate. A lot of the real estate concerns are specific to Hong Kong, which is sort of a hard asset, an easy place for people to park money. The Chinese consumer is much more broad-based. If you look at the percentage of the Chinese economy that's consumer, relative to GDP, it's about 35%. Relative to the U.S., about 70% of the economy in the U.S. comes from the domestic consumer. Even in an export-driven economy like Japan, it's about 65%. So there's a lot of growth coming out of the consumer in China. The economies are starting to diversify from an export-led industrial economy to more of a consumer economy. So really not too much of an impact from real estate.
The Chinese people want to shop like us Americans. And finally, as China goes, so goes Brazil and a lot of the other emerging markets. Do you think this will lift some of your other funds? Because you also have a Brazil fund.
We do have a fund for Brazil that focuses on the consumer. We actually think there's an increasing decoupling happening amongst the BRIC nations. So really, China and Brazil are performing very differently. They're very different economies. Obviously, Brazil much more linked to commodity markets. They have a significant inflation problem. So clearly, long-term, these economies are very attractive from a growth perspective, but significant differences across the economies.
All right, thanks a lot. Good
Wonderful.
luck with your fund. Thank you for watching The Street.